Is the S&P 500 had a rough and tumble fourth quarter last year, a pretty banner year in 2019. Can we expect to see that momentum carry into 2020?
You know, it's really hard to imagine. I mean, we've had really lackluster earnings up until now. Analysts are still predicting that we'll see a big boost in Q4 when Q4 finally comes out in Q1. But year to date, we actually haven't seen much earnings momentum. So this has literally all been multiple expansion in a year where uncertainty is supposed to be weighing down the markets, and we just don't see that. So what do you expect to expand to? Next year, earnings growth is really set to be pretty tepid, something around, 5%. That's really, I don't see how you get massive, multiple expansion off of that, and the economy is going to be slowing to boot. So I think that, we really are priced in for the absolute best, and there's room for, quite frankly, downside at this point.
All right, so what's been driving the multiple expansion? I mean, it sounds like you don't feel it's justified, but there's got to be a reason why people are going to pay up more for every dollar of earnings that companies generate. There has to be a sense of positivity there. What's driving it? And, of course, is it justified?
Well, I'm not sure what's driving it. I mean, what drove the trough in earnings was just the fact that much of the earnings that should have been experienced this year were actually experienced last year because of the tax incentive plan. And so it created kind of a gap in earnings for this year. And so I think the markets were really trying to look past that and say, well, the average of the 2 years is still pretty good, and therefore we should have pretty good earnings. That we're still on track to be in a pretty good place. So I think they were discounting the idea that earnings were so far have been a struggle. There's still, like I said, a lot of expectation pinned to Q4, with less expectation in 2020. But the problem is that we think that multiples are just too far gone at this point. At 21 and a half times, just getting back to some normalcy at 18, 17 and a half times, that's going to be a hit to the markets. When you only have 5% of earnings growth, it doesn't take much to have a flat year.
All right, it doesn't sound like you're very high on the U.S. markets from a valuation perspective. But the U.S. market is not the only one hitting its own record highs. There are other places around the world, developed and otherwise, that are hitting highs as well. So let's talk about where the value is on a relative basis, if not in the United States.
Well, Dom, you hit the nail on the head. Value is where investors are looking. Even in the U.S., investors are looking at value. But if you go abroad, you're right. It's really hard. There are a lot of places that have also, quote unquote, uncertainty that have been hitting new highs. Europe has been hitting new highs. The UK, Japan. However, one of the places that has had a pretty good year, actually, but not a stellar year, and still has some room in its own valuation to continue to go, is actually emerging markets. And we think that 2020 could be a year for emerging markets. I mean, considering that while Donald Trump is touting a deal with China, that deal actually does still favor China in many ways. And so emerging markets could be the trade for 2020.